Welcome everyone to the Kendall Report. Sorry for the late start. Had a little issue with the software update that came in tonight. Anyway, we are here and live. And I saw somebody mention it was a pretty slow trading day. It was that. There wasn't a lot going on. You would have thought that based on the news that had come out with PPI coming in so much better, that we would have rallied a little bit more than what we did. It was interesting because it was way better than the report. And in theory, the PPI it precedes the CPI, right? So producers produce and then it passes on. So it would appear that maybe this report was a little more bullish than yesterday's report was bearish, but markets are trying to digest this, and there's a lot of things I think that are going on in the marketplace. But before I get any further, make sure you like these videos tonight, hit that subscribe button, and make sure that we get at least our 1,000 likes minimum that we'd like to get every day. So anyway, what I'm talking about here is that the PPI numbers were very good. They came in at minus 0.4 year over year, 8.7. Previous was 9.8. That's quite a bit of difference. But markets are maybe picking it up on a little bit because in the live room, in the last 30 minutes, last 20 some minutes of trading, we printed a new low on the session and the market reversed on a dime and went straight up and rallied about 45 handles before the futures closed. So it was pretty impressive. We're trading about where we are right now is where we traded up to into the 39.74 level on the S&P futures. So it's fairly impressive. And you'll see tonight as I go through the analysis, it looks like there's going to be a bit more upside, whether we can do anything exciting. There's still a lot of cross currents going on in the markets right now after the big bust that we had on Monday. So I'll go through all those details here in a minute. So let's talk a little bit about what's coming out on Thursday. We have continuing claims coming out. That's expected to be at 225 plus 225,000. I'm sorry, it said continuing. Jobless claims are 227. Continuing claims came in at 1.473. The number I'm watching for is greater than 1.5. I do expect to see that number start to increase again. It has been over the last several weeks. It was 1.43. Now it's up to 1.473. So it is increasing a little bit, but that's a number I'm watching just to start to see if we are seeing some deterioration in the employment situation. So let's talk a couple more things. Retail sales was 0 last month, no increase. This month expected to be the same. And I don't have any feelings one way or another if that means anything. I don't think it does. We're also looking at Empire State Manufacturing expected to be down. All of these manufacturing numbers, PMIs have been coming in pretty weak. And that's what to be expected, I think, out of the economy at the moment. So Empire State minus 14, Philly Manufacturing coming in at 3.5. It was at 6 last month. So this is coming down a lot as well. And so in general, the economy is starting to show that weakness. And there's really, I guess the cross currents are just everything about inflation. And like I said, I still believe that the CPI number was really blowing out of whack. I think that August just got control of everything. And all of a sudden, we did try to trade down into the low was, I believe, let me just look at that real quick because it's on my mind here, was 29. So it was 39.29. The previous low was 03. I mean, we printed 29, and like I said, it turned around on a dime. We rallied from 29 to about 73 right off of that number. And that was in the last 15, 20 minutes. So there was a fair amount of short covering, to say the least. I was arguing that the other day, intraday, that it was getting harder for them to push after the big sell-off. All of a sudden today, it wasn't very easy for them to push the market down. It was a lot of work. And then, like I said, there was no conviction overnight. And I think as we come in to the rest of this week, it's going to be a dud, with the exception of what I tagged this thumbnail on tonight's video, was Quadruple Unwind to begin. And a lot of times that'll start on Thursday. It will be positive unwind, short covering. I have a feeling that there's an awful lot out there that is going to potentially be some short covering. I don't expect anything spectacular to change anybody's mind about what they're thinking as far as with the Fed just being less than a week out, or a week out as of today. We'll have the Fed meeting next week. So I don't expect anyone to make any big moves, but I think if the cash flow starts to go that way, we might see some further squeeze come into the market. I don't see that the sellers are going to get back in control here at the moment, but it's very neutral. As you'll see when I go into the technicals here in a few minutes, that there's not any real direction up or down right now. And that was my argument in last night's video, is that all we're in is this big sideways range. And right now we're just, for practical purposes, from 3,900 to about 41.5. And we're probably just going to work that range a little bit more. And there are some things that are starting to potentially look positive. There's some Fed projections coming out on the upside for Apple. There's some for the E-minis. There's current Tesla targets on the upside starting to emerge. And not really a lot of these apocalyptic numbers coming out of anything of my work telling us that we've got these big downward surges coming. I don't see that at the moment. And like I said, I'll cover that all in the technicals here in a minute. I'm just looking at my notes to see if there's anything else to cover. Not really. Let's go ahead and get into the database, and we'll get through this video. It should be fairly quick tonight. And so let's get into it. All right, as we go through the Wavetech database, we are seeing some selling coming in, finally. 52.71% bullish. We saw 951 sells versus 155 buy signals. So we're starting to see a little negative rotation, and that's going to be interesting over the next couple of days. You folks know the numbers. We need to remain above 42%. And so we're starting to see some breakdown. And what's happening with these patterns that are in the models right now is a lot of them are starting to fade a little bit. They're close to ending a cycle or slash position. And so we're starting to see some of those roll off here. And we'll see if it gets to be more material over the next couple of days, and see if we can't, especially if we can't get back above that magic number I've thrown around a number of times at 4040. I think we stay under that number, we're going to continue to see attrition on the short-term database. As I've talked about many times in the past, the intermediate database is only 30% long, so 7 out of 10 symbols there have no position. So we don't own a lot on intermediate in our portfolios, those type of things. But for the most part, we're starting to see maybe the daily database start to not only recycle, but start to liquidate a little bit here. And it's very gradual. And a lot of these trades, as I showed you, are still looking fairly good. From a sector standpoint, a lot of these short-term trades don't make a lot of money, but we're still up 4 to 6% here across the board on the 4 sectors that are long right now, which are consumer, cyclical, energy, services, and technology. And the best return is in energy. It's actually energy starting to come alive a little bit. I think that sector is up 2.9%. I've talked a little bit. I'll probably, maybe by the end of the week on tomorrow night's video, I'll go through and maybe I'll bring up the XLE hack to see how some of these energy stocks are doing. But there's still just a lackluster, no leadership, nothing out there. The large cap stocks did pretty good today. That's what helped drive the market. The NASDAQ was up 0.74. It was the best performer from an index standpoint today, and it was mostly the mega cap tech stocks that were moving that index. So overall, the database just continues to be the same. We're starting to see some liquidation. We'll see if we can hold the 42 number. The next couple of days will be pretty critical, and unless we can get back over 40-40 or back into 41 handle, which I would argue that we probably should be. I'm not sure we belong where we are now based on, certainly on economics. If that CPI report was that bad, I just don't see it as being that bad, especially with the follow-up report with the PPI out on the street now. So let's go ahead and get into the technicals. Like I said, should be able to flow through tonight's video fairly quickly. All right, starting with the S&P, we've been flat. We did get the RTX, STX buy signal two sessions ago on Monday. We have one. This is the second day sideways. Should be sideways to up, and then depending on what happens with the PPMs will help us to determine what's next. Now we're trading 73.50 right now, up 8 handles on the session, up 0.20. But what we're looking at is PPM1 now is 0. It's not going up or down. Basically, the moving average is flat. And when we get to that type of configuration, that suggests there is right now a 90% probability that we could rise above the 39.97, which is the 10-day moving average. And if we just look at the market grid, R1 is 39.92, R2 is 40.23. It's a good chance. I've made notes to myself that all of the indexes, the NASDAQ, the RTY, and the S&P futures here are all likely to print maybe an S1, R2. S1 would be basically a retest. The way we're trading right now, I'm not sure we get down anywhere near S1. And if we don't, and we penetrate R1, which is 92, 39.92, then there's a good chance that we're going to at least print to R2. I don't see an R3 in there, but that's 40.53, getting back toward that 40.40 number that I just mentioned. So the pattern is very neutral. One of the things that you'll see up on top here, and you can see them on the pop-up on the screen here, as there's 3 targets out there, which is interesting. Again, this is a new target, fib target that popped up, and they are, high target 1 is 43.13, which is a retest of the 43.27 level, 44.72, and 45.70. And I'll cover this. We're right here at the middle of the month. This is the 15th. So when I come in on Sunday night, we'll start talking about the end of the quarter, what the expectations are. We'll go through quarterly charts. We'll go through a little longer term perspective on Sunday night. But for right now, we'll just stick with the short term. And like I said, key number, there's going to be 2 numbers to watch tomorrow. S1, 39. Actually, I'm going to say there's 3 numbers. S1, 39. 39.21 I'm on the wrong bar. I moved over one. Sorry. It's going to be 39.38, the low. I don't think that gets taken out. If it does, that sets a retest up of the 93.03 low. Probabilities are that will not happen, and I don't think we'll print probably below 50 on the S&P overnight. We'll see, but it could go S1. And then the 3 numbers I want you to watch is R1, which is 92, 39.92, the 10-period moving average, which is 39.97, a simple average on the daily, and then the R2 number, which is 40.23. And I'm looking more toward the market to get back above the 10, potentially close above 97. Let's just call it closing over 4,000 again tomorrow, and then the market potentially moving higher into Friday as well as we come into the quadruple witching and we start to see all these unwinds happen. And I think the unwinds, you just have to bet that just about everything's short out there, the way things are balanced or appear to be based on sentiment anyway. Same configuration here in the NASDAQ. NASDAQ is looking at the same pattern. We've got this little flat pattern. We got the STX buy 2 days ago, sideways for 2 days. This is the second day sideways. I think we probably move up toward, once again, R1 being the pivot point, 12,323, and then R2, 12,436, S1, 12,121. We're trading 243. Like I said, I don't expect we're going to get that close to the S1 number. and just use the R1 as a pivot. We get above that. And then the other number that's in the pattern, just like with the S&P, 12,329 is the 10. So if we get above that, we're definitely going to at least test this R2 number. I don't think there's anything to get the market so excited that we could print R3 or better. But, maybe folks will wake up and realize maybe the CPI number wasn't quite as disastrous as it was made out to be. As we go to the RTY, as I mentioned, RTY had a cycle low that came in yesterday. So that when we get these cycles, and those of you have the indicators, and when you see a cycle like this, the day that the cycle comes and you close higher or you close over some key numbers on the market grid, something like that, what you're going to watch for then is that the low of that cycle holds. So what you're looking at here is the low 1820, we're 30 handles above that. That's quite a ways above here. We're up 0.23. All these indexes are up about the same overnight. And then what we're looking at here on RTY is S1 1832, R1 1859, 1873 is R2. We're trading 1850 right now. So we're just about R1 already. And as I've talked about several times, the configuration of Russell is kind of forward leading the other indices. Even though it's not outperforming, the pattern seems to be almost like one day ahead. It's almost like giving us a glimpse into the next day. We'll see if this continues, but it looks to me that we're probably across the board, like I said, S1, R2 on all of these indexes are the expectations for the high-low for tomorrow. And like I said, I don't think we get down to S1. We might. There still is a lot of selling pressure that's laying around that's looking to sell, but it doesn't seem to be able to push like what we saw today. They pushed to the new lows, and then there was no one to hold the bag after they sold. So they got caught being a bag man today. So we'll see if that continuation and that configuration continues over the next several days. All right, next we'll take a look at the 10-year. 10-year is starting to stall. I talked a little bit about this. We're at 341. Yesterday's high, we got up to 347.60. We look at the R2 yesterday. This was 347.90. So we printed up to R2. S1 was 3.39. We had a 3.38 low, so we printed S1 R2 yesterday, and we finished a little closer to the bottom end of the range than the top. So it looks like we're trying to see a little bit of flattening here. There's still insane uptrend numbers going on here, so rates aren't going to go down very much. The absolute worst case would be 330 in this pattern. That would be a substantial move in this current configuration. So as far as the grid goes for tomorrow, looking at maybe the 338, worst case 335 on the downside, 344 on the upside. So it should be fairly tight in that range as we go in through Thursday's action. Next, we'll take a look at crude oil. Crude is continuing to just move up into this resistance zone that I've been talking about. We're at a plus 0.22 on ppm1. ppm2 is 0.05. And it's just a flat pattern here. The only thing that's happening is we are starting to get some upward projections, high target 1. So there's a fib target 93.55, 98, 101. I talked a lot about this. I'm going to go over to the weekly chart here in a second because I think that's where you want to pay attention for the resistance. But PPM1 is starting to turn up. We're trying to get some traction here on the crude. Going to weekly, as I've been talking about, 91.26 is still my ceiling. We got a minus 1.38 on the PPM1, so there is a lot of overhead resistance right there at 91. We printed up to 89.15. This is a weekly so far this week, so I don't expect it to get above that number. 91.26 is the 10. We're looking at R2 91.85, so somewhere in that range would be the extreme if we spiked up. I don't expect it to hold there. And it's going to take, we are seeing PPMs trying to turn up, but the PPM1 is so negative that it's likely to keep things a little more in a flat to sideways range for at least another week. If we do break through that, then you'll look at the market grid here above the R2 91.85. You would be looking at 94.96 here on a weekly. We'll see how that plays out, but I think we're going to stay within those bounds I just discussed. Gold has continued to be under pressure here. We're back at 1704. The low is 1703. So we're trading. This is a weekly chart. So this is the low of the week so far. And we're really just, the thing that I'm waiting for, as I've talked about, is we have a cycle low coming in this week. And depending on how this trades toward Thursday and Friday and into early next week, will tell us a little bit more about what the configuration is. As I've discussed many times, PPMs are starting to turn up here. So from a configuration standpoint, we're setting up a potential, we haven't signaled anything yet, a potential bottom in gold, maybe at least to run back into the 1760s, 1800 handle. But there's still, everything is very limited. So I'm watching the cycle event very closely along with some of these key numbers that are laying around this pattern. Finally, we'll look at Bitcoin. Bitcoin continues to, this is a weekly, be volatile. We traded down to 19,632 so far. Came right into the S3 level. STX is 19,280. So just about into the S3 STX level, the extreme for the week. Still got a long ways to go. This trade is a Sunday to Sunday chart. So there's plenty of market action here to go. PPMs are starting to lose some of the gains in momentum. In the case, really, it was losses of the downward momentum. We're still not positive on them. So there's still, I would say, another 2 or 3 weeks. We've got to hold, I talked about this number before, the low of this pattern so far is 19,556, and then the big low is over here at 18.6. That's kind of the drop dead number for me if we were to take that out. It looks to me that we're going to stay within the grid this week, and so expect to see those bounds. I'll just put that back on screen so you can see it. We should stay within the market grid on the downside. 19,842, 19,280 should remain in those ranges there. I don't expect it to get below that, and especially if what I was just talking about in the indexes, if we do find a little bit of a bid in the indexes ahead of the Fed and maybe some squaring up before next week, then chances are Bitcoin will firm as well. I just don't see any big rallies going anywhere. We're locked in a range here on Bitcoin for sure. Okay, folks, got through that pretty quick tonight. I think it's pretty straightforward with what's going on at the moment. Not a lot of noise around the markets, at least from my viewpoint right now. I think like I said, I'm still sticking with the story that the CPI was way, way overdone. That was ridiculous, selling, over 4% on most of the indexes was way too much and way overreaction. So we'll see how much it'll self-correct or what kind of action we get next couple of days. The key numbers are obvious. The 3903 number, and then on the near futures we had a 3883 number as well out there. So we'll see how all this plays out. Like I said, I think the next couple of days are going to be significant, and if the quadruple witching is more of a short covering, kind of squaring up than what we've seen in the past, then we're likely to see maybe a little bit of a bid come back in the market next couple of days. Anything's possible. Like I said, there's virtually really no solid trends up or down right now. There's no downward acceleration going on in the patterns. We're locked in a sideways mode. I wouldn't even be surprised if we did print below on basis the S&P, the 3903 level, that it doesn't print and bounce. And those are pretty classical patterns that happen a lot of times. They'll print through the lows. There's no follow through selling them. We end up just doing a big reversal, maybe even get an outside reversal day, something like that. There's just nothing out there. No way to really put nail it down on this thing really, really tight at the moment, other than what I set up in the technicals is S1, R2 possibilities across the board on all the indexes. Okay, folks, that'll do it. Make sure you hit the like button. Been doing a good job the last several nights, so I appreciate that. This is free, just for a like, and we'll keep everything rolling forward. And those of you in the live room, see you there at 1 o'clock Eastern time tomorrow. Thanks a lot, folks.